Well, good morning, traders. And we start the new week, the new month, the new quarter, really focused on what's going to happen with the US dollar this week. There's going to be a lot of data to drive there. We've got the ISM manufacturing numbers coming out at midnight tonight, Eastern Standard Time. The market's expecting that to grow at a slightly slower pace. The index is expected to print around 60. We've got the services ISM numbers later in the week. And of course, we know that the US economy is largely driven by how the service sector evolves. So it's about 70% of GDP. And then on Friday, of course, we've got the non-farm payrolls number. Now, last month, the non-farm payrolls number, the highlight of this was, of course, the wage growth that came through. Now, in terms of what we're expecting for this wage growth, the market's looking for average hourly earnings to be around 2.8%. So, of course, if we get that above that number, that will throw more weight to the idea that the Fed are going to have to raise again in December. At the moment, the probability of that stands around 74%. But if you are looking at the interest rate markets and the pricing in, I mean, professional traders are starting now to focus just as much as the April contract, the March-April contracts, and see what's being priced in for the March meeting from the Federal Reserve. And also people are playing in the euro-dollar spreads, the difference between December 2018, December 2020 contract, which at the current pricing junction is around 50 basis points. So around 2 rate hikes priced in that situation, which of course is very low when we consider to what the dots plots came out from the Fed the other day. But we are watching to see what happened with the dollar. If you have a look at the price action in the dollar index, we did see it print a bullish outside week, which means that price traded below last week's low and closed firmly above last week's high. So the bulls have effectively wrestled back control from the bears. The question now is, will we see a follow-through bid coming through in the dollar this week? I think you've really got to have a look at the fixed income market. What happens with US 10-year Treasury yields? If we see them gravitate back to 3% and perhaps below, that would be your cue, therefore, in my opinion, to be looking to take some profits on these dollar-yen positions. I think we could push back down into sort of the low 113 level, where I'll be looking to buy back in. But there are signs that we could see, if we do see some of this data in the US coming out weaker, yields will probably fall, and that will take some of the heat out of this US dollar. Certainly, if we focus on euro dollar, that had a bearish outside week. So again, we're focused on what happens in whether we can see some lower lows coming through there. And of course, people are focused on what's happening in the Italian budget dramas that have been going through. We have seen them agree a budget at 2.4% of GDP, which is certainly a lot higher or bigger deficit than what people had been anticipating, and therefore the Italian government should in theory have some extra cash to spend on things like infrastructure and health and bits and pieces around. But that's sort of going to throw them at loggerheads with the market. And certainly if you look at Italian bond yields, they've grown up nicely through 3%. Relative to German bunds, they've widened. And of course, the concern here is that because Italy has such a big funding task from the bond market throughout the next 5 years or so, the higher the yields, the higher the cost it's going to cost to service some of this debt and roll it over. Plus the fact that the Italian banks have got a huge amount of this debt on their books, are going to fail to sell some of their non-performing loans if yields continue to creep up. So the banking sector's under all sorts of pressure at the moment, and we could see a higher correlation between euro dollar and euro crosses against that Italian banking sector if we do think it's becoming a bit more systemic, which at this stage we don't think it's going to be. Here in Australia, of course, all eyes on tomorrow's RBA rate decision. I think if you look at the interest rate markets, we're not really pricing in the base case of or above 50% chance of a rate hike until mid next year. That feels about right given how this economy is evolving at the moment and what we've been seeing. But there's no real reason to see a material change in the wording in the statement. Of course, they're not going to raise rates, and they won't do for some time. But it's the statement which, of course, is key. If you have a look at market moves since the last meeting, you've got the Aussie 10-year up about 11 or 12 basis points from that time. The ASX is fairly flat. The Aussie dollar's down about 0.5%. The trade-weighted Aussie is down a touch as well, but not really enough to see them materially change their view on the world. And certainly therefore that should be a fairly benign event in terms of risks to your portfolio if you're trading Aussie dollar. And Aussie dollar still looks like it has downside capabilities. Of course, we are watching to see if that can trade through 72 cents. It is trading in a beautiful trend channel at the moment. It has been for some time, and we continue to respect that until which time we do see a breakout on a weekly basis of that channel trend that's been in play. We go into the pound this week. Of course, people are focused on what's happening with the Tory party conference and whether or not Theresa May, who speaks midweek, is going to show a much more defiant message behind her stance with Brexit, try and galvanise the troops, so to speak. And trading the pound has been very, very difficult because you are beholden to headline risk. I still like euro sterling to the upside, perhaps not this in the short term, but I do think that will gravitate higher over the sort of medium term. And of course, we'll have to see how it goes on the headline risk side of things. I think cable needs to hold that 130 level this week. I think paths are that we probably see a bit of messy price action throwing in cable as well. So a lot to focus on, certainly US data. My gut instinct is that we can see some downside in yields, which may take a bit of heat out of the US dollar. And we obviously want to see if we can see some follow through from this bullish outside week we saw on the dollar index. And that's one to really focus on. It's going to be driven by the bond market. We're watching what happens in Europe. Of course, I think if you want to do a trade, there is the Italian MIB, which has been very heavily traded from the short side at the moment. Will we see a bit of a reprieve coming through there? And I think it's going to be interesting to see how the Aussie dollar reacts, if at all, to the RBA statement through this week. My gut is that it will probably see a fairly benign event.